Now with me to discuss is Chen Herzog, a chief economist at BDO Consulting Group. Chen, thank you very much for being with me.
Hello.
Let's talk about the effects of OPEC's decision. We've seen that since they made the announcement, some oil prices have surged. Can we say at this point that they've achieved their goals, or are they on track to do so?
It's too early to tell, but you know, the OPEC cartel, like any organization, is only as strong as its weakest link. And we see the smaller OPEC members like Angola, Libya, they are not fully committed to the reduction of output. And the fear is that some smaller members would have the incentive to cheat, to increase production despite the decision to limit. And if this process starts to evolve, then everything breaks up.
Well, on that point, what can we say brings cartels to want to trim outputs? That seems counterintuitive to what they would want to do.
Well, the idea is that they want to control prices, to reduce output so that the market becomes in short supply and prices goes up. And the OPEC cartel was very effective doing so 10 years ago. But that was at the time that the global oil economy was in strict supply. So a little bit reduction would promote very high price increase. This is not the case now. Today there are a lot of surplus production power, not only in OPEC members, in Russia, in the US. So the fear is that any reduction that OPEC takes place will be supplemented by other non-OPEC members, and then they will not be able to control prices.
Well, you know, over the past few years, since 2008, when we've been following this massive fluctuation in oil prices, a lot has been said about what OPEC can do. Does it even still have power? At this point, what kind of power does OPEC still have to really move markets?
I think they have only psychological power, and we saw that just the mere announcement moved oil prices higher, but in real effect, in the short term, they have no effect on the market because there is, in economic terms, there is oversupply. And until the market doesn't clear up, until supply doesn't meet demand, we will be in a situation that they have no effect on the market. And the structural change in the oil economy is the discovery or the advancement of shale oil technologies in the US. US oil production doubled, and this changed the balance of powers in the oil economy. OPEC is no longer a dominant force as it used to be 5 or 10 years ago.
So you're, of course, mentioning the effects of this OPEC decision on shale producers and the little consumers, the little people sitting like in this studio, you and me. What does all of this have as an impact on us, even if vicariously? You
know, from the short term, we enjoy low oil prices. Our gasoline becomes cheaper, air flight becomes cheaper, standard of living becomes cheaper, and we're very happy that oil prices are low. But there are other effects. Low oil prices are harmful to the environment because, in effect, all the efforts to develop green energy become less profitable. So we see the possibility of development of electric cars, of renewable energy diminished because of oil prices going too low. So this is one effect. The other effect is effect on the global growth.
So your prediction that this surge that we've seen in the past few days since the announcement is not something that will hold for very long?
I would differentiate between short term and longer term. In the longer term, oil prices have to go up. The current oil prices are not sustainable. They do not represent the cost of producing oil from the marginal field, from shale oil production. So it's a temporary situation that we have surplus production capacity, and prices go even below the cost of production because of the situation. But in the longer term, what we call, as economists call, the invisible hand, the cost of oil, the price of oil must meet the cost of production, and we see that in the range of $60 to $70 per barrel, which is higher than the current levels.
Chen Herzog, always unpacking very complex things for us here on the show. Thank you very much for joining me for this.
Thank you.